Hey, how you doing? And thank you for coming to my channel, My Bite Bank. In this video, I am actually going to introduce you to a brand new investment opportunity, how you can own property for as low as $50 a square foot. Sounds crazy, right? But you actually can, or you really can. It's pretty epic. If you're wondering what it is I'm actually talking about, I'm referring to fractional real estate. This is where a bunch of investors, like-minded individuals, coming together. They purchase high-value real estate, and they both and all reap the rewards of the monthly rent that they receive plus the capital gains. This is actually an epic way for millennials or Gen Z to add real estate to their portfolio. Yes, real estate is expensive. Most of us are priced out. We don't have the down payments, or the banks tell us we can't afford the monthly rent, the monthly mortgage payment. That's the way of life, the way it works now, right? So let's get into it. Let's see what fractional real estate really is. Fractional real estate. This is where one will buy portions of a property at sometimes at $50 a square foot or $65 a square foot, and they earn monthly rental income, and they wait till the asset either appreciates or hopefully appreciates, and it does not depreciate. But it is real estate, and it can happen. So the basics of fractional real estate is fractional real estate offers the opportunity to co-own valuable assets like real estate alongside several other investors. Purchasing a share functions like buying a stock, granting you a slice of the rental income and any potential appreciation of the property's value. With regards to ownership and the benefits behind traditional fractional ownership, I will always say that if you have the means and you already own property and you're looking to obtain to basically uh, put more property into your portfolio and you have the funds to do so, then I wouldn't say fractional real estate is ideal for you. You're obviously, I'd always say traditional ownership is far more beneficial than fractional. That's because if you have the means to pay for it, then it's 100% yours. You're not sharing with anybody. You're making your own decisions, and it's your say so. But with fractional ownership, the benefits is basically a lower barrier of entry. It's great for anybody who has 20,000, 10,000, 5,000 laying around, and they just want to have some sort of property ownership, and so they can't get into the regular market, but they can by using fractional real estate. So that is one option of how they can actually get into the market. Another one would be reduced financial risk. Because there's more than one investor and everybody has a different form of basically a different amount that they invested, the risk is shared among everybody. So it is less of a risk. Instead of spending 100% on the full property, you're maybe spending 10% on that property of what you're going to be owning. So in that part, yes, there is the financial risk is definitely reduced. With regards to increased liquidity, unlike traditional real estate where you need to either get a real estate agent or list the house yourself and you need to wait for a buyer to come in and purchase the full amount of the property and wait till they get a mortgage and so forth and so forth. With fractional ownership, because you're dealing with fractions, it is a lot faster and easier to sell that portion of what you own quicker than would be in a traditional real estate by means of using an open market. So basically, owners of any form of a fractional real estate can go into an open market. They can sell their portion, they can trade it, or they can even use it as collateral to receive funds to reinvest into another property. And that can be done from the comfort of their own home. No issues, no ifs or buts. They can just basically wake up one morning and say, I don't want this property anymore. You know what? I'm gonna sell it. You can go right ahead, go onto the exchange, list, put out your property, and sell it. It works the same way as a traditional in a way where there obviously needs to be a buyer. Or another option you can do is you can also sell your fractional property back to the management company. Most of them do buybacks on a weekly basis, so you can do that. There's also another option on how you can quickly liquidate your portions of your asset when you do fractional real estate. And just like traditional real estate, fractional real estate, the ownership is also deeded. You get an electronic copy that's fully yours, with your name, everything on it, deeded ownership. KYC is required. So remember, you do need to do a KYC on when you do a fractional real estate, just like traditional ownership. So yes, you're going to have to do a KYC in order to take part in fractional ownership. So if you're wondering how fractional ownership works, it's actually fairly simple. If we look traditional style, we have obviously the one unit and the one owner that he's renting out to his tenants. The one owner, he has the full ownership of the property, which means he says full say of what happens. He knows his tenants, he interacts with them, he collects the rent, he does the maintenance, he's just full say so. With regards to fractional real estate, there's more than one owner. If you look at a property that's say based on 2,000 square feet, you probably maybe have no more than 3 to 5 owners on that one property, each owning whatever portion they invested into it, but around that would be how much you might be getting. These owners right here, in most cases, do not know the tenants. They have no interaction with the tenants. They do none of the maintenance. They don't collect the rent. They just sit back, relax, and collect their weekly or monthly rental costs. That's the difference between the traditional and the fractional, how it works. This owner has full interaction. These owners have no interaction, but they collect fraction of the benefit, but they just sit back and relax. So let's take a look at a property that we would be offering that we have acquired and that's available for being fractionized. So when we list properties that are available, this is kind of what majority of what you will see. It gives you the basic breakdown of what we received the property for. So you can see that this is a condo that we obtained in Panama. Most properties will be either in Panama, Detroit, Cleveland. There will be some in Alabama and Florida. Those are the primary locations where we acquire majority of the properties. So if you look at the purchase we got this one for, it's a condo. We got it for $496,174. The price per square foot is $65.63, but for members, the price is $50.93 USD. Remember, well, the membership fee is $99 for the year, and that just gives you basically the discount you get there for the token, plus a few other features that are available. We also provide you what is the expected income, which is 10.69%. The rental income, this is the net rental income, is $4,420. So depending on how many fractional investors you get on this, they split this entire thing on a monthly basis. So this would be an example of a property that we have in Panama. Another one I'm going to show you is a property that we actually have in Alabama. This property was acquired for $304,920. Again, the offer is $65.82 for non-members per square foot. For members, the offer is $50.82 per square foot USD, and the net rental income is $1,810 USD, with an expected income rate of 7.12%. Not bad for a property that's located in Alabama. One thing that you will notice in the next property is ones that are located in Detroit. Pay attention to the rental income. This is actually very important. You'll see a big difference within, and it does matter where the properties are located, especially in the U.S. Obviously, like it is anywhere, based on whichever area. But you'll see in some parts in Detroit, some of the rents won't go more than $500 a month. In other parts, it's between 500 to $700. It's what you'd be looking at USD on a month, usually on a Detroit property. The same thing goes with the Cleveland property. But let's take a look at a Detroit property and see what it offers. Perfect. So here's one of our Detroit properties. It was acquired for 76,637.70 USD. For non-members, the price is $65.09 per square foot. For members, it's $50.09 per square foot. The expected income is 9.30%, and the net rent is $594. Big change from what you saw in the Montgomery, Alabama one, right? So that's a net rent. Now your net rent, just so I probably did not mention before, what the net rent is, it minuses your entire maintenance and then also the maintenance fee that the management company charges and the property taxes along with the insurance. In most cases, utilities are paid by the tenant. We also have something they call Section 8 homes. These are homes where the government pays up to 80% of the rent. So these are fairly safe haven homes and not bad. So we do also have some of these homes, and it will be actually listed if it's a Section 8 home. But this would be an example of a property in Detroit that's available for fractionized real estate so that people can actually purchase and earn monthly income off it. So now let's take a look at what would be the benefits of traditional and fractional real estate. As mentioned before, with traditional tenant interaction, the rent collection, and the maintenance, that is everything. And obviously, the owner, what he says he doesn't have to go to anybody. With regards to the fractional landlords, no tenant interaction, no rent collection, and no maintenance. Just sit back, relax, and collect your monthly or weekly rent. That's really the easy part of it. This is another property in Detroit. As you can see, it was acquired for $96,982.50, with, with being offered at 65.25 per square foot for non-members, with members receiving it for $50.25. This particular property offers a net rental income of $743. So as you see, then it's obviously higher than what was in the other Detroit property. That is purely because of the region where they're at. So that's another you'd want to take a look at as well. The expected income on this is 9.19%, not bad as well. And then our next property, I'm going to show our final one. This is what we like to call our starter property. It's a great property for those who want to get into fractional real estate but don't know how it works, so they just kind of want to have a low entry just to give it a shot. So this is it. It was purchased for $75,405. It is being offered for $55.27 per square foot. Now think about it, like honestly, where can you actually really go and invest own property for $55.27 square foot? Just honestly, like where can you actually go and own it for that much? I'm not too sure where. At least not in the US. I can't really think of a place where in the US you can. But just think of that. Like, just think of if you want to brag to somebody. Go, yeah, I own property. Oh yeah, yeah. You could just buy 1 square foot if you want. You're not going to receive much. You're going to receive pennies on a weekly basis. But hey, at least you own some sort of property, right? You own something. I guess that's one way of looking at it. But this is one of the starter properties that we like to show people. As you see, the rate is $55.24 per square foot for non-members, offered at $50.27 for members. Net rent is $584 USD with an expected net income of 9.29%. Now, if we look at if you're somebody who'd be interested actually in purchasing one of these square footages and you'd want to go deeper, you actually get what we provide, an investor kit. In that investor kit, you get more details about the property. So obviously, you get the square footage, how much a year per square foot you're being paid, what your net rent will be, depending on you get on your deposit, depending based on the deposit structure. But you also get what we like to call a property scout report. So a property scout report is kind of like a credit file on all US properties, and it's only for US properties. They're not offered for properties anywhere else. Like if you want to get one in Panama that we're offering, a scout report is not offered for that. So the scout report is basically a comprehensive neighborhood specific crime, demographic, housing, school performance, and real estate trend forecast analysis. It gives you the opportunity to really understand what property you're buying and what you're getting yourself into. These things really are detailed. They have a lot of information that even like my favorite feature on it. It actually provides what is the market rent in the area, so you as an investor understand if the rent over the last 5 years has it increased and what's happening. What is the majority of ownership in the area, or are there more renters in the area? This is key information as somebody who wants to get into property ownership, especially you want to diversify your portfolio, this scout report, it really gives you good detailed information on the property. So it totally makes sense that if you're interested in getting an entire investor package, yeah, the scout report gives you great details on it. Kind of gives all the homework for you. All you got to do is just read it and review it. That's it. Now, let's do everybody's favorite subject in school, math. In this video, we're actually just really going to look at one part of it, the profit. We'll make another video where we're going to look at the loss part because there'll be a little bit more details we're going to want to put into the loss part. But with the profit, because hey, everybody just really just wants to see what's the profit going to be like. So let's start off with the profit, and then we'll follow up with another video that shows the potential loss if you were to get into fractional real estate. All right, let's get to it then. Perfect. Let's go. Ted bought 497.51 square feet of a rented property for $25,000 at $50.25 per square foot. It will be earning him $191.54 USD monthly. Now let's do the basic math on it then. So we know he invested 25,000. So if he's earning 191,054 USD a month, so in a 12-month period, that means he would earn $2,298.48 USD. Properties are appraised every 24 months. So if you look at the 24-month period with all rental, he's made a profit of $4,596.96. So again, just so that you do remember, properties are appraised and they're appraised every 24 months. You are, as an owner, you would be received a full email when the appraisal is coming up, so you can see whether the property has. Once it's done, you get only you can see the detailed information as the owner, nobody else. It will be posted on the site that appraisal has been completed and whether his increase or decrease in value. So those details will be posted. But the more detailed version of what the appraiser has found, what should be any sort of upgrades that should be done, whichever or how the market trend goes, that is for you to see. That will not be seen by anybody else aside from the investors who purchased and own that particular property. Not even the management company who sees that part. That is for your eyes only. So next we'll take a look at, we know so we hit our 2-year mark, property has been appraised, and we've been told it's increased by 10%. It was purchased originally at $96,982.50. So we do our basic math. We know it's increased. That means it increased to $106,680.75. To see how much the property has increased per square foot, very simply, we know the property has 1,930 square feet. So we divide 106,680.75 divided by 1930 gives us a price of $55.40 per square foot. Now we know that we own 97.51 square feet. So if you multiply the 55 by 40 by 497.51, that gives us $27,562.05. And we want to see what type of profit did we make off that. Well, we take the 27,562.05 minus by our original investment of 25,000. That means we made a profit of $2,562.05. That's just the initial capital gains on the property. So, did Ted actually make money? Well, let's take a look. If over the 24-month period, Ted earned $4,596.96 in rental income, and then the property also increased by additional 10%, did he actually make any money over the 24-month period? Well, if we take the rental income added to the capital gains of 25,562.05, that means he's made an income of profit of $6,102.05. Not bad for fractional real estate, right? Especially if you're just looking to sit back, relax, and just have some sort of passive income on there. It's not that bad. And if you don't live in the U.S. and you like the exchange rate, it's even better. If you live, like, for example, in Canada, I think $191 USD is about what, $240 Canadian, something like that. You'd be looking at, and depending where you're at. So definitely, why not? If you're somebody who's looking to get into real estate but has been essentially priced out, and you just want to, you put some property into your portfolio, then the fractional real estate makes total sense. I'm not, at least in my view, it makes sense. At least that's the way I see it. So if you're interested in getting in and you'd like to know more, there's a link at the very bottom there where you can book a free consultation. Don't be afraid. We don't bite. We're just here to help you, just so we can help others understand how they can actually earn passive income and maybe find that financial freedom. I'm not gonna tell you that this is you're gonna find financial freedom using any of these techniques. Maybe you might, maybe you don't. That's not for me to say. But what I can say is that it is a great way to just diversify your portfolio, earn some capital gains and monthly income, especially if you got funds laying around, you're looking to get in, and you just want to own some property. So it definitely makes sense to get in. Or if you just want to buy 1 square foot, you just want to spend the $50 or the $60 on 1 square foot and just own it and just see how it works, how it goes. Why not? That's kind of what most people do. Some people just buy like 1 square foot and they want to see are they actually be receiving income. Is it actually working? This is what some people do, just to give it a try, and then they come back in and say, you know what, I want to go more because it's working. So yeah, we definitely help you out all the way, set it up, show you, teach you how to use it, so you understand, and then you become basically an expert yourself in understanding how you can get in, and then eventually start purchasing property on your own and start selling it. You'll see how it works. All right, well, thanks for tuning in. I hope you found this video informative and you find that that's something you want to get into. Again, if you want to try it out, there's a link at the bottom. Send us a book your free consultation. We'd love to chat you. Otherwise, subscribe and like the video. We always post different ways you can earn passive income using whether cryptocurrencies or any form of traditional investing, but anything that help you earn any form of passive income. Thanks and peace out.